Alright, hi everyone, my name is Jason. This is my first YouTube video. I'm planning to make this weekly YouTube video to track stock portfolio. I named this portfolio Lazy Guys Equity Portfolio because I don't want to spend too much time on investing or like trading. This is a long-term growth stock portfolio. This is a hypothetical portfolio. I start the portfolio with 100,000 US dollars. I have invested personally for over 4 years now. That's why I'm planning to do this to show I can beat the market, whether if I can beat the market for 2020 and onwards basically. And the rules are very simple. There are only 4 rules. It's all about the lazy method. You buy and hold. You do adjustment if required. If not, you just chill and make money. Watch your money grow. Fast way to make money is using money to make money. Right, so let's start with the rules. Rule number 1, portfolio adjustment no more than 2 times per month. This is basically minimize day trading or like overreaction to all of the market news. I would only do two adjustments per month, maybe 1 or maybe even none. The adjustments are basically based on the investment thesis. If I think the growth is not there anymore or the price is too high, the valuation is too extended, I would cut down the position, or I would just take the profit off and put it somewhere else. So second rule, full position 10%, half position 5%. Very simple rule. So if I think the stock is very good for a growth play, I will put 10%. If it's already very expensive or whatnot, or the growth is kind of slowing down, I'll put it 5%. Normally I would only do adjustment from 10% to 5% or 5% to 10%, 5% to 0, or 0 to 5%, 0 to 10%. Depends on how much cash on hand I have. Right now, we started the portfolio 100% all in equity. So right now I don't have any cash. But as the January goes on, if I sell some positions or I cut down some position, I'll have cash for new positions. And rule number 3 is track sales growth every quarter. Basically, watching their earnings and also rate their earnings report, press release, listening to the conference call. And if the company lowers guidance or meets the guidance, I would cut the position to half or drop the entire position. And last but not least, this is just for taking some profit. If the trading EV to sales is over 20, I'll cut position to half. I won't drop the position, but I would cut the full position to half position just because it's too overvalued to me. And I'm not going to do it just when the EV sales hit 20, because I only do 2 adjustments every month. So I'll wait till I need to do other trades. I'll do the overvalued trades as well. And basically I started the portfolio the day after Christmas, 12/26. I bought 15 different companies. Their position size varies. Some are 5%, some are 10%. But the entire 100 grand is all spent. This is how many shares which equates to. This is the price I paid, and we go from there. So as of January 3rd, our closing market, this is what we have now. So cost, percentage, how much money I put in, shares, these are all very simple. For the price, this is the closing price as of Friday, January the 3rd, and we also would have the market value of each position, and we'll basically subtracting market value and original funds. I can get the P&L, and I also did additional column to track the percentage wise. So as you can see, most of them did pretty well, except Roku, which is a lagger. But I think this Roku still has growth going on, and basically from Kane, this side is all the portfolio side. This side is the fundamental side. So I track the market cap. I also track their enterprise value, which is basically market cap plus minus net cash. So net cash or net debt, either way, it's basically cash minus debt. And I also track their trailing 12 months sales data, basically assessing their growth potential. Just ignore Q1, Q2, Q3, Q4, because that's not the company's Q, that's my Q. Q4 is the most recent quarter, and then you can do that every quarter going back. And I also sum it up to get the trailing 12 months sales, and then I do a EV sales. This is basically the key measure to assess if it's overvalued or not. I also have another column for growth. This is the most recent quarter sales growth, basically this quarter. These are the growths. Most of them are very impressive. You can see 90%, 52%. Some smaller like this. This is a bigger company, the Palo Alto Networks. It's already 20 billion, so you don't expect them to grow like other ones to like 50%, 60%. I also have Amazon or like Microsoft. It's a trillion two company. You don't expect them to grow like 30% a year. 13% is good enough. I also do a proxy for forward EV sales, basically using the most recent growth rate just to project to next year. I know the growth will definitely be smaller than these ones, so this is just a proxy way to do the forward. The real forward will be much lower. However, just to keep everything simple, I don't care about the projection for the next 1 year, because you never know. In a lot of the high growth names, you are not really trading their profits, right? They're not making any profit anyway. And here are the watch list. Basically the stocks I would buy if I have cash. Now I don't have any cash. Now I spend all the 100K. And I also track the indexes. I track SPY, QQQ, IWM. QQQ is Nasdaq, so I am beating Nasdaq by almost double, which is good. Small cap is not performing very well after Christmas. Don't know why is that. Probably just general like institutions are buying SPY and QQQ mostly. Small caps don't have any love yet, but you never know. For January, most of regular folks put money in the stock market to mutual fund their 401k. So institutions are definitely net buyer for the whole month, and we'll see how it goes. So, and for now, everything looks very good. You know, I was able to cut Amazon, very nice. Basically, it's almost at 4%. I think Amazon is gonna do very well in 2020 because the 2019 is not good at all. And then I think Microsoft will continue to wane. So these are the position. And also some smaller ones. CrowdStrike is a recent IPO name. It was in a lot of Trump drama. I think you will recover nicely in 2020. And also the lockup expiry already passed, so insider already had the chance to sell, and institutions can feel more comfortable buying this name. And yeah, so I'll start from next week. Every weekend I'll do an update on price. If I did any trade, I'll put in the trade. Yeah, and let's see, after 52 videos, see if you can beat the market. Thank you for watching.